Ladies and gentlemen, K Kim here. Welcome to the daily update. You guys had a good day trading today. Market is up quite a bit. Market is up about 2% across the board today. We did see a much bigger open this morning. As you can see, this was gap up here at open. So I think that was about 2.5% gap up. And then next hour we saw fade to the downside, right? And then we got back up here and then pretty much been grinding above 311, as you can see in this vicinity. So let's kind of dive in here and dissect what had happened today and why, and what we can expect going into tomorrow. So I've been pretty much tweeting out all day today, not all day, but during the midday, giving you guys levels and the update on the 65-minute chart, daily chart, and on the 65-minute oscillator, which you want to be looking at it also. So you can also go ahead and follow me at 2K Kim on Twitter and StockTwits to get those updates during the midday, so you don't have to wait for the end of the day video like this. So looking at this 65-minute chart here, so you can see that we had some large fluctuations, and it's, you know, we've been talking about pretty much a lot this week and over the weekend video that you know, this market is you know, what we talked about yesterday. This market is now starting to turn into a kind of a bullish posture, right? So what happened was yesterday, bulls reclaimed my short-term moving average here, as you can see. And you know, what happened was when the gap got filled, it acted short-term resistance, but we thrusted higher on the 5th and 6th hour yesterday. So again, when the gap gets filled, you guys know that you guys have been following me. You know, a lot of you guys have been following me for a while on Twitter and StockTwits and on YouTube. You guys know that when the gap gets filled, more often than not, right? Not always, but more often than not, when the gap gets filled, it's going to act as support. So this was an up gap, right? So when the bears brought it down, technically there's a little bit of gap left, very little bit, so I don't want to annotate it. Let's just say it's been filled. We got the big gap up here, and then the first hour was stuck around. And it's interesting how we never were able to get above this falling resistance. So many things actually happen. Let me explain. So there was actually the big gap right here. You can see this gap was actually much bigger. Do you see that? This was actually where it closed back in June 10th. And then June 11th, that's where it opened. So this gap was actually a bigger gap, but halfway when it gapped up here, it filled almost 50-60% of it, right? So you guys know that when the gap does not get filled all the way, right? You can see it here. This is a good example here. You can see there was a gap here, right? That gap was not filled all the way. See that right there? We talked about it last week, here and here. Right, bulls tried. This was a Fed day. These long, the top tails there. But regardless of what happened that day or that tails, but you can see buyers attempted to fill the gap and not able to fill it completely, right? And that's usually bearish when the gap, it doesn't get filled. And then next day we saw a big gap down, right? And then that's when things got a little bit more volatile. We started getting into more of a volatile environment. So there was a lot of gap downs and stuff like that, right? And then we saw a big gap up today. And we talked about this over the weekend and yesterday's video that this long-term moving average has a pretty impressive resume, right? So longer-term sentiment was favoring the buyers, right? Favoring the buyers. At the same time, we also talked about my oscillator being at that oversold level, right? We'll come back to the oscillator and I'll explain and I'll analyze it later in this video, but let's stick with the price action for now. And then it's interesting because it's almost identical price action we're seeing similar to May 15th. So you can see that midterm move. You see my midterm moving average. You can see right there my midterm moving average act as a resistance there. And then it closed the day right in this vicinity, pretty much this day back in May 15th. We pretty much hung around here all day, but kind of closed the day right at that, that midterm moving, my midterm moving average there, right? A lot of people have been asking me about my moving averages, what my moving averages are. I put that in the description below, so you can put that. You can also track it if you want on your charts also. But my moving averages are all different in every time frame. This settings of this moving average that I use, there are 3 moving averages. You can see there's my short-term moving average, there's my mid-term moving average, there's my longer-term moving average, right? I use this setting, use these moving averages only for my 65-minute chart. Just keep that in mind. My moving averages are all different on all time frame. And sometimes I adjust these too. So when I adjust it, when I change it, when I update these moving averages, I'll make sure to put it on the description so you can always check it if you think that they're looking a little bit different. Because I might forget to do it, or I might forget to mention it on the video. But anyway, so you can see on this day back in May 15th, initially that midterm moving average, right, that blue dotted moving average did act as resistance, and then we hung around here for a while. Next day we saw a big gap up, huge gap up, and this happened after it found support on my longer term moving average. Guess what? Almost exact same scenario here. You can see that my midterm moving average acted as support. We brought it back down. We got back up. We ended the day near the midterm moving average, and we saw a big gap up. There's only reason why we saw a pullback today and why we didn't see a pullback back in May. This was what, May 18th? You see that gap is still open today. There's a reason why we saw fade today and there was no fade back in May 15th. Do you know why? Because there was a bearish island top reversal gap there. That's why. If there was no gap, there's a good chance that gap was going to be not filled. That's why, because it also was not able to fill that gap entirety of it, right? So that's why that bearish island top reversal gap does have some presence here. It does have some bearish presence. Back in May 18th, we did not have any kind of gap there. So we gapped up. There are a few times where bears did try to bring it down but failed. And then we gapped up again, pull back, continue higher, pull back. And then that's when we saw big bullish run there. A little bit similar script here, right? We got the long-term moving average, we got mid-term moving average, except the fact that this time around we pull back with island top gap reversal. This one was just price plunging. There was no gap down. This is why tracking gap is very important, right? You don't see many people track gaps, and because most people don't understand how to use it in their analysis. There was no gap here. So when we saw a big gap up, that gap held, and that gap still remains open as of today. Different scenario, we gapped up, big gap up, 2.5% gap up today, but there was island top reversal gap there. And that's why I made that gap more stronger color, which is purple color, to let me know that gap is not just ordinary gap. That's an island reversal gap. It's gonna have its presence. And that's why when we saw a big gap up, not able to fill in the gap all the way, even if bulls would have gone up and filled it, that was gonna act as resistance anyway, right? So, but that was a level right there, and there's no coincidence that we stopped short right at that level, and we've been pretty much kind of struggling to get higher in that vicinity. So when it got faded, you see how quickly we bounced. Why did we see a bounce so quickly? Because it happened within like 10 minutes, I think, because I was watching this morning, and So it was first hour, second hour, and I remember this was kind of plunging very, very fast. Very, very fast. It was plunging. And then as quickly when it got filled, when the gap got filled, and that long midterm move, you see my midterm moving average there, the blue dotted moving average. When that moving average was retested, that's the level where the gap got filled, and that's also the level where you see prior resistance, potentially new support, and we have that moving average, my midterm moving as a 308 level is very, very important because of that. We talked about it yesterday. In the short term of things, we saw that happening already yesterday. You can see my short-term moving average right there. That down gap was filled. That's why on the third hour or fifth hour, we saw the long upper tail, and then fifth hour, price continued higher, and then sixth hour price came back down, retested prior resistance and new support. This happened in the short term last night. 2 hours, the last 2 hours of trading session. Today we happened in the second hour of trading session this morning. Now it happened in the midterm of things, right? Gapped up, pulled back, retest the horizontal, pivot because now it was a resistance, potentially a new support. Gap got filled. When gap gets filled, it's going to act as support because it's up gap, and then that's the vicinity where we saw that midterm moving average hanging around. And I remember how quickly, it came down, touched it, and it just went right back up. And then pretty much all throughout the day, we hung around above 311. Why above 311? Same thing here. That's where we gapped down. So it's kind of a swing high there, right? That's where we saw this thing gapping down and continue lower. So you can see that was that short-term support. And we hung around there all day pretty much. We did see some buying activities throughout the day or last hour, and showing you the long lower wick there. So where do we go from here, right? To get a better understanding, let's look at my oscillator here. So my oscillator is start to slow down. You can see that how you don't see this thing, driving to the upside, just screaming bullish. That's what it was like last few days. It was a screaming bullish. Now you can see the sloping lower, slowing down kind of looks something like this maybe here or something like that. We got some room to move though, just a little bit. We got a little bit of room to move there. Usually it gets there. Especially it's coming off from the oversold level, as you can see here, right? So that's oversold. When it comes off of oversold level, usually it will get to all the way back up to overbought level, meaning we got just a little bit of strength left for the buyers. So bulls are starting to get tired, but they got a little bit of energy left. That means they can push maybe another day or another couple hours, right? So I think what bull's gonna trying to do is potentially turn this into a bull flagging type of pattern and continue higher and trying to fill this gap. That when that gap gets filled tomorrow, we're gonna see this oscillator going pretty near to the overbought, and the gap got filled. Bulls are tired. We're gonna see a pullback. Once the gap gets filled. In rare situation, sometimes I've seen where the oscillator does not get all the way back up. It kind of stops short and then it starts to fall down. That would happen if we see this thing breaking to the downside. And keep in mind, now the price is now above my midterm moving average and my short-term moving average and my longer-term moving average. What does that mean? It means benefit of the doubt. Now that price is higher, goes to the buyers in the short and the mid and the longer term. I wouldn't be surprised to see potentially this thing pulling back, retest some of these moving averages here, and then go. That's another possibility. That's another possibility. So best way for the bears to materialize from this downtrend resistance, best way is gapping it down back below 307, 308. So then you don't even have to worry about 308 support and all these two moving average clusters. Those two moving average clusters are going to provide support. You can see here that short-term support, short-term moving average acting as support there. And it does have a pretty impressive resume. You can see right there, here. See how it seems like just looking at last 2-3 months on run, those midterm moving average tends to be acting as support, especially when it goes up and fall back to retest, right? So when it goes up, fall back to retest, goes up, fall back to retest, right? More often than not, it goes up, fall back to retest, it goes up, fall back to retest, it goes up, fall back to retest, it goes up, fall back to retest. What does that mean? That means we're in an uptrend, higher lows and higher highs. So we went up. So if we fall back to retest the moving averages here, we got the midterm moving average at 308, we got the short-term moving average at 308, that's the level of horizontal support at the same time, it's going to act as support. So I don't think bears want to just bring it down, because if bears just bring it down, it's going to get back up. And then we're going to go up and fill this gap. Best way is gapping it down below these moving averages and kind of kill this momentum here, and then potentially turning this into some kind of a trap and then getting back lower and hoping to break below that longer term moving average. I think that's the best bet. That's a lower probability setup, right? Every time when you look forward to something that is against the current trend, that's going to be lower probability, right? Because you can see we are in an uptrend, are we not? We're now well above my longer term moving average, and now we're above my midterm and my short term moving average. So any kind of scenario that you're looking for, a bearish case, this thing to coming back down to 290, obviously anything can happen in a market. It's just that you're now going against the high probability setup. There's a higher probability that this thing is gonna either continue higher, or even we see a pullback and we're gonna see a support at 308, right? So I want to give benefit of the doubt to the buyers in the short term, mid-term, and long term based on my moving averages. But I do not want to dispute the fact that we do have that island top reversal that was not filled all the way. Because of that, bulls need to fill this gap as quickly as possible. If they leave this and then we see the price getting below these moving average, that could be trouble for the bulls. That could mean there's a chance that price could come back down to 298. So it's a little bit different scenario. Yes, the price is above my midterm, my short term, my long term moving average. In a general sense, in a normal condition, I want to give benefit of the doubt to the buyers in the short term, midterm, long term. But because that we have that island top reversal, that pink box there, that was not completely filled. So we're in a different situation. This right here, that's bullish, right? There's bullish. Here, because of that move, that island top reversal, it has some weight to it. So what I want to say is I want to actually say the short-term sentiment, I want to be neutral. Even though we are above my short-term moving average, but because of this island top reversal gap that was not filled, right? I want to give this short-term sentiment as neutral. So benefit of the doubt is neutral in the short term. But in the midterm, I still want to be bullish. I still want to be bullish because you can see we did see sharp fade on the second hour, but we got it right back up. So that midterm moving average definitely showing some strength there. So midterm bullish, longer term obviously bullish here and here. So short term neutral. I don't want to give benefit of the doubt to the buyers in the short term until I see this gap getting filled. Once I see that gap getting filled, then I can categorize it as bullish in the short term. So so we're at this juncture where bulls have gathered a lot of its momentum. Bulls pushed it up today and they stayed up. That's a good thing. But the concern, and something that we should be concerned going into tomorrow and next day, would be that this gap doesn't get filled. Because remember, the longer this gap stays open, and it was not filled away, partially filled. When the gap is partially filled, it's making the bulls a bit vulnerable. Remember, this was a smaller gap, but remember what happened when the bears or the buyers didn't have to fill this gap. We had a little bit left here, and from that point on, we did see some hectic situation for the buyers when this gap was not filled all the way. But this gap is an island gap. This gap has a little bit more weight to it. It has a little bit more presence. So bulls need to go up and fill this gap as soon as possible. If we start to fade at this level without filling this gap, it could be hectic for the buyers. So tomorrow I'll come back and I'll follow up on this matter. You can follow me at 2K Kim on Twitter and StockTwits. Just to let you know, I am more active on Twitter. I do share a little bit more charts on Twitter. Because I don't know, StockTwits website is slow. So anyway, so you can follow me on Twitter and StockTwits, and I'll give you guys an update if I do see that the gap got filled. I'll tweet that out, let you guys know. If I see that my oscillator is getting into that overbought level, I'll also tweet that out, let you guys know that, so you can get update on it before the move or this video goes out at the end of the day tomorrow. So, well, you guys enjoy your evening, and good luck trading tomorrow.